Hello, everyone and others, and welcome to the Good Morning for Thursday, July 2nd in the year of grace 2026. A trader speaks to traders. Today, everything will come down to 2:30 p.m. The U.S. employment report is finally coming out, and for once, a good number could actually be scary. Finally, at the end of the show, the cult quote awaits you, the one from a man who dreamed of being reborn as a market. You'll see why the lightning bolt? So for our day-to-day, we have three key issues that will set the pace for our session. We have the employment number and how it's read, the market's interpretation. We have the rout of semiconductors in Asia, since, as you can see, there was a big drop last night. Trading on the Nasdaq stock market. We're almost flat. At the moment, but you can see it's starting from 2 a.m. We had lost all the gains we had made. Well, it's quite a drop, and it should warn us that we're going to have to be extremely careful, since we've had Samsung, for example, which lost more than 9% in Korea. Things are shaken up again, but we'll look at that in detail later, because it really shows us that we need to be very, very, very cautious, at least for all traders on the Nasdaq. Like me, and finally we'll look at the yield curve, which will be our barometer today. So, employment numbers, we're watching those. We're also keeping an eye on semiconductors, which took a huge hit in Asia, and then the yield curve. So, that's a quick overview of the markets. Well, yesterday, Wall Street closed out a record first half of the year. We've talked about that. But on the other hand, the session itself actually stalled. Chips plunged, dragging the Nasdaq down 0.66%, the S&P at 7,022%, and the Dow Jones, that one remains stable. And here, we can see there are still major stakes, huge moves involving hundreds of billions in tech stocks. We have Micron, we talked about it last week, which collapsed by more than 10%. And on the other hand, we have Meta, which jumped by nearly 9%. So why did Meta surge? Because its iconic CEO said that for all their excess AI-related computing power, that is, for computers, well, it's a bit more than just computers. For ultra-powerful servers they aren't using, since they're not running at 100% capacity all the time, he's going to create a cloud and sell this computing power. That's always been the source of wealth for Microsoft, for example, and for AWS, for Amazon as well. So the markets thought this was very, very good. It's optimization. Actually, it's a bit like you. If you, rent out your house on Airbnb, you go on vacation for a month and rent it out on Airbnb for a month. It's the same thing. It's a bit like what Facebook does. When they reach, say, 80% of their computing power usage, for example, they'll open up the rest to the market. If I may say, 10 or 15%, you always have to keep a little bit in reserve, just in case. So on Thursday, at the opening, they used circuit breakers, because right from the start it was down 5%. Samsung dropped sharply, losing up to 9%. Nickel, on the other hand, fell a bit more moderately at the open, and then Hong Kong started moving up again. Now, why am I talking about the opening? Because I'm recording this video at 6 a.m., so the Asian markets aren't closed yet. Yesterday in Europe, the CAC 40 lost 0.79%, the Euro stocks and the DAX moved as well, so it was a typical European session. The CAC 40 drops and the others always do better. So our barometer for the day is going to be the yield curve. Let me remind you that the yield curve compares the 2-year and 10-year bonds. Normally, when you lend for a longer period, it should pay much more. But right now we're seeing a contraction because the 2-year is already yielding 4.18% and the 10-year is yielding 4.48%. So it's pretty rare to see this, or almost, when you borrow. So, in fact, whether you lend to the United States of America for 2 years or 10 years, they give you about the same return, the same thing. So, advice? If you're lending for 2 years, it's better to take the profit, 4.18% for 2 years. And after 2 years, you have control over your money again, rather than locking it in at 4.48% for 10 years. Before, that's it. You'd be locking up your money for 8 more years for not much extra. The difference is just 30 basis points, simply put, so it's really, really slim. And what we've seen historically in economic history is that when this cushion shrinks, when the gap between the 2-year and 10-year gets very small, a recession is often looming. We've identified this as a sign. An early indicator of a recession is when the 2-year and 10-year rates are almost identical. And now at 0.30, we're getting pretty close. So it seems crazy since we're in the middle of an AI boom. Right? And yet, no. Yes, actually, if you look at Facebook yesterday, no. If you look at Micron yesterday, no. If you look at the COPS, the Korean index, the major Korean tech stocks, that got hammered and are still getting hammered, by the way. So maybe it's not so obvious after all. So that's something that's very important. And right now, I look at this curve every day. We have the 2-year that's climbing. So why is the 2-year climbing? Because there's a rate hike on the horizon. And here, if we have employment that's too strong, it would flatten things even more. It would encourage, if employment is too strong, it would increase the likelihood that the American Central Bank raises rates. And so the 2-year will gain a little more. And the 10-year should also gain a little more. But right now, since the spread is only at 0.30 points, we could move to 0.28, 0.27, or 0.25 points. And it's still interesting to note that. I'm sharing this with you. Economic history is not an exact science, but it is a science that repeats itself quite often. So let's keep that in mind. Recessions have always come after huge waves of euphoria, where we end up destroying, hating what we once loved. So I'm thinking of Alcatel at 100 euros during the internet bubble, which I experienced at 101 euros and which ended up at 2 euros. It was always the same company. They were always doing the same thing, laying cables, internet, and they were always making completely lousy phones. But there you have it. So today's paradox, you've actually summed it up in a single curve. Look at this curve. And the greater the gap between the 2-year and the 10-year, the more so. That means we have an economic situation, I was going to say normal, almost standardized, where we could keep moving forward like this. And the more it tightens, be careful. There you go. Well, today's topic, as you understand, we've actually been waiting for it for 4 days now. This is the big event. It's the employment report. It's released today at 2:30 p.m. Paris time. It's called the NFP in the United States. It's the number of jobs created last month. It's happening on a Thursday, which is extremely rare. Just a reminder, because Wall Street will be closed tomorrow, so things will be slow since it's the American national holiday the day after tomorrow. I don't find it logical, but that's how it is. So there's a consensus expecting about 115,000 jobs to be created. If it's above that, it could be concerning because things are going too well. If it's below, it might be a relief, thinking the Fed won't raise rates and the market could go up. So be careful. It's going to be a strange session. But as you understand, the real issue isn't the number itself. It's the reactions of the central bank. It's about what's going on in the mind of its head, Kevin Walsh, who right now doesn't hide the fact that he thinks prices are too high. So the only way to bring prices down is to raise rates, not lower them. So a number that's too strong could scare the market. It would bring that rate hike closer, which is still feared. Currently, the market is betting 65% on a rate hike as early as September. If we get that, we could also see another one in December as a sort of Christmas present. So what's the ideal scenario? A number that's neither too hot nor too cold. A soft little number that keeps us guessing. Or neither too good nor too bad. Lukewarm water isn't so bad in the stock market either. So, technical analysis. Did you see the Nasdaq take a hit? Overnight. That's normal because they're waiting for the 2:30 p.m. numbers, since Nasdaq stocks are the most affected. They're the ones that borrow the most. And if they're the ones that borrow the most, they're also the ones that employ the most people. So, if there's a lot of job creation, that means they'll have to hire more employees, which isn't good for the company's results. And on top of that, starting in September, as we've discussed, they risk having to borrow at much higher rates. A quarter point or maybe even half a point. If you add that up on billions, tens of billions, or even hundreds of billions being borrowed, we don't really realize it because, well, personally, I haven't borrowed $1 billion yet. But it must hurt a bit when they raise the rates at that point, especially if you're borrowing $100 billion. So 100 times more. Actually, for those who have an excellent level in the French aggregation in mathematics. By the way, I read a study recently that really fascinated me. This is our anti-France minute. In the anti-France minute, they did comparative studies. The best math students in France are at the level of the worst math students in Japan. I'll repeat that. This is Radio Andorra. This is Radio Andorra. The best French students in mathematics are at the level of the worst students in mathematics in Japan. There you go. Do with that what you will. But don't worry. Whatever happens, it's always the government's fault anyway. After all, that's the point of having a government. It's a universal scapegoat. If it's hot, it's the government's fault. If it rains too much, it's the government's fault. There you have it. And that's how you govern, with people who have the IQ of a somewhat backward teenager. Because let me remind you, your teenager, it's never their fault. It's always someone else's fault. And when they become adults, it's exactly the same thing. It's never their fault. It's always the fault of the state and the government, whoever they are anyway. That's why there's no more honeymoon period. Everyone gets hit right away. It's true that they'll recover. Honestly, it would be complicated. By the way, I invite you to go to your friends' houses and open their medicine cabinets. Generally, every French person has enough unnecessary medication from overconsumption to basically save an entire African village. Because obviously it's free, so if it's free, it's worthless, and if it's worthless, we have tons of it. All right, let's go. I'll stop. I'm actually a bit angry about what I'm hearing. It's always someone else's fault all the time, and no one ever questions themselves. And I question myself every day. Maybe that's the difference. We can't keep acting like teenagers. So, about the Nasdaq, I'm telling you, wait. Honestly, just wait. What's interesting is if we get a devastating number, if we get a weak number, we're going to stay stuck in this range. They might feel relieved and bounce back. If we get a devastating number, what interests me are the lower and upper bounds from the past 15 days. We could go test those levels. That shows you the possible range depending on the result. But before that, take the time to look at the order book. You'll see how it empties out from 2:25 p.m. to 2:29 p.m. There will be absolutely no one left. Even the liquidity providers will pull out. You'll see an order book without liquidity providers, and everyone you see in the order book then. These are people who have a survival expectancy of just a few weeks or months in the stock market. They're casino gamblers. They're absolutely not traders. And traders last, casino gamblers don't. In fact, the latter show up more often. That's it for the Nasdaq. I really have nothing else to tell you. That's just caution. Caution around 2:30 p.m. S&P 500. It's a bit less exposed to tech in terms of capital and borrowing, so it's staying near its 15-day highs, which is rather positive. And the Dow Jones 30 also at its peak. By the way, it just set another small record, an all-time high. We're seeing record after record in every Dow Jones session right now. So is it doing well at the moment? Yes. Lore just a bit above 4,000. Well, that's pretty good as long as it stays above that level. We're good. Bitcoin above 60,000. That's good. It's still in a slight rebound phase, so that's rather positive. And we're not under $70 anymore, or even $69. We're under $68. No. So why is it going down? Sure, there was the Strait of Hormuz situation, but never forget, during the war, something incredible happened that almost went under the radar, except for those interested in oil. The United Arab Emirates slammed the door on OPEC. Why? Because they were fed up with the quotas and said, we can produce twice as much. So they're no longer bound by the quotas. Let me remind you, the very idea of OPEC is to come together. By saying, let's limit production so the prices stay high. It's better to sell our barrel of oil at $70 to $90 than to sell it at $45 or $50. There you go. Well, the United Arab Emirates did a different calculation, thinking we can produce a lot more. For some in OPEC, that works out for them because they're already at full capacity. Their quotas are maxed out. They can't do any better. But we're only running at 50% of our capacity. So we'd rather sell 100% at $50 or $60 rather than 50% at $80. It's a choice. But the idea behind it is that they want to bring in money quickly. Because what happened is that no more tourists are coming to Dubai, and that hurt them a lot. So now I think they're selling off their barrels of oil at a discount. They're going to sell at a discount. They're really going to sell everything they can on the market. And that's why it keeps dropping. There's the Dubai effect. There you go. You've had Dubai for chocolate. There's also the Dubai effect for other things. For oil, let's look at the CAC 40. Go ahead if you want, but you have to be a bit of a pessimist. It's all the way at the bottom. So the good news is that we're at the bottom. At some point, you have to ask, is this the lowest of the low? We're still low. The DAX is at a 15-day high, and the same goes for the Euro stocks. We're almost at the highest point. So, sorry, excuse me. I'll add the Euro stocks too. A little chart I forgot. So we have a classic situation. CAC 40 all the way at the bottom and DAX all the way at the top. It could almost be the start of a song. But with that, I'll leave you in suspense. No, today's method. Otherwise people will ask me for it. And I forgot the agenda. Well, you already know the agenda. 2:30 p.m., employment report. We also have the weekly jobless claims. It's every Thursday, so it comes out at the same time. And we need to keep an eye on the drop in chip stocks. Let me remind you that Micron took a pretty harsh -10, which limited the Nasdaq's loss. It was Facebook that dropped 9%. But Facebook isn't going to drop 9% every day. On the other hand, Micron could. It might still keep going down, because when a stock loses more than 10% in a single session, it means there have already been a lot of sellers and no buyers. So these stocks are really getting crushed. The anecdote of the day. So it's a weird anecdote, but I'll tell you anyway. In the 1990s, there was James Carville, who was Bill Clinton's advisor. And one day, he said something that became famous. Maybe because it's totally silly and a bit incomprehensible. He was asked what his main dream was. So I'm not a normal guy, like wanting to meet a celebrity, win the lottery, get your 8th Ferrari, those silly guy things. Well, James Carville, he said he dreamed of being reborn, so his next reincarnation as a bond market. I'll say it again, he wanted to be reborn as a bond market. Because the bond market, he said, can intimidate everyone. I'm not even going to psychoanalyze the fact that the guy wants to reincarnate as a bond market, just to have the power to scare the rest of humanity. That's pretty scary. The analysis, but there you have it. So 30 years later, what I wanted to tell you is that absolutely nothing has changed. Today, it's still this bond market that's very discreet, but sets the rules. So get used to watching it, the 2-year, the 10-year U.S. bonds, and especially the spread between the two. And if we have employment that's way too strong, we'll see our bond market start to rumble. And so I'll remind you of James Carville, who dreams of being reborn as the bond market. By the way, in the comments, here's an interesting question. If you could be reborn, what would you choose to be? There you go. Good question. If you tell me you want to be a blonde with big breasts, let me point out that blondes with big breasts don't spend all day touching their breasts all day long. That's well, for those who don't know, that's a joke. Not a particularly good one, though. But hey, after all, if you have to choose, we'd rather that than be reincarnated as an ant, right? Well, there you go. We're done. What else can I tell you? Nothing. No, nothing else. That's it. The ending is pretty terrible, though. So, with that, but since it's live and I don't want to edit and I never edit, what I like is authenticity. Well, there you go. Reincarnate yourself as an ant, a bond market, or a blonde agrosan. That's your choice. Well, actually, no, we don't really get to choose. We'll see. We'll see. Big hugs, take care, and we'll see each other tomorrow for the good morning trading on an American holiday. Well, yes, because honestly, it really annoys me not to trade tomorrow, so I'm doing it anyway. The good morning trading, a kind of resistance. Don't let them push you around, comrades. We should have the right to work on an American holiday. That's the least we could ask for. With that, let big capital exploit us. It's what we're asking for, after all. All right, I'll stop here. Big hugs. Ciao.